All right. In this case, lots of stuff happened, and we are going to try to understand what has happened. Now, in this case, you have Jerry Trading, who sells luxury sandals in Orchard Point, and he uses the first in first out method. So you know that once you read first in first out, you know that there's going to be some batches. What you buy first, you have to sell first. If you bought it second, you will sell it second. If you bought it last, you will sell it last. That is first in first out method to account for your goods sold. Right. So first, they tell you that the business has got 60 units of inventory. Right, 60 units of inventory on costing 1,200 on May the 1st. Now this 60 unit, I just want to remind everybody that it's your first batch. So I will just name it as B1. All right, that is your first batch of goods that you have. Okay, so that's B1, the first batch that you had. All right, so firstly, since you have on the 1st of May 2021, you already have 60 units and it costs $12,000. That's what you need to do to prepare the balance brought down for the inventory account, right? So on May the 1st, your balance brought down. Which column is going to be? Is it going to be the debit column? All right, debit column, we know that debit columns are plus because accounting rule for inventory is plus. And credit columns are minus. So balance brought down, which column are they? Debit, credit, or balance? That's right, they are in the balance column. So you have $12,000 in the balance column. Now, is that inventory a debit normal balance or is it a credit normal balance? To decide whether is it debit or credit in the balance column, you need to look at the plus sign. The plus sign is on the debit side, so your after $12,000, you should have a debit sign. And if you do this, you will get 1 mark. Okay, so that's what we have recorded the first transaction. All right, then they tell you that all these transactions take place during the month of May 2021. Now you see here that you have bought another 60 units costing 22,000, right? I'm going to highlight this in another color, green. Now this 60 units costing 22,000 is actually your batch number 2. So I'll put here B2. It is your batch number 2. You bought it second. But not only does it cost 22,000, they also tell you that freight cost 1,005 was also charged in the invoice. Now, can you remember that when you buy inventory, the cost of the inventory is not just what you pay for the inventory. You also have to add in any other cost that you incur before you actually receive this inventory into your warehouse. As in, if you don't pay for this inventory, you don't pay for this cost, you cannot receive the inventory. Now, if you don't want to pay for freight cost 1,500, you cannot receive your inventory. So really, the freight cost is part of your inventory. What does this mean? When your freight cost is part of your inventory, the actual cost of your inventory is not just 22,000. The actual cost of your inventory is 22,000 plus your freight cost of 1,500. So eventually, your cost of inventory is 23,500. That is the correct cost. So this $23,500 is your B2, the second batch of 60 units that you have. So we're going to record this transaction into our inventory account. They tell you that you bought $22,000 worth of inventory from Shushu Traders. What a cute name, Shushu Traders. And not only that, it was an invoice, all right? Now you have to remember, invoice is for credit transaction. So if it's a credit transaction, you have not paid Shushu Traders yet. Shushu Traders is your trade payables. So that's what we are going to record next. Right, that's what we're going to record next. On May the 5th, what happened is that inventory account has increased by a certain amount. It has increased by 23,500. Why did it increase 23,500? What is the other account affected? The other account affected is trade payable Shushu Traders. You owe trade payable Shushu Traders 23,500. And then, of course, what you need to do next is to record the balance. How do you record? How do you find this balance? You take 12,000 plus 23 because debit is plus 23,500 equals to your balance of 35,500. And up to here, you get 2 marks if you have the date, particulars, and debit value correct. Let's see what happens on May the 14th. On May the 14th, you sold 60 units of inventory. Oh, you sold 60 units. Now, which 60 units did you sell? Did you sell B1, 60 units on top here? Or did you sell B2, the one that you recently bought? Now remember, first in, first out. You sold B1. Right, you sold B1. Right, you sold B1, 60 units of inventory, which is the yellow one really. And then they tell you here, for 32,000. At this point in time, everybody is like, oh, the cost is 32,000. No, please remember that 32,000 is the selling price. It is not the cost of sales. What is the cost of sales for 60 units, B1? You need to identify this B1. Why? Because you need to find out what is the cost. And the cost is over here, 12,000. So therefore, you sold B1. Your inventory account actually reduced by $12,000. Right, your inventory account reduced by $12,000. And what is the other account that is affected? Inventory's best friend is cost of sales. When did this transaction happen? It happened on May the 14th. And of course, you're going to have to calculate your balance column, which will give you 23,500. What happened on May the 16th? So May the 16th, something happened, right? So I'm going to read it. May the 16th, you bought 20 units costing 17,900. I'm going to highlight this in Tiffany. Bought 20 units costing $17,900 from Jason. And this is actually batch 3 that you bought. Right? You bought batch 3. This 20 units is the third batch you bought. And you bought it on credit from Jason Brothers. And you're going to have to record this. So when you buy inventory, this is your inventory account. Your inventory account need to increase by 17,900. What is the other account that is affected? You bought it on credit from Jason Brothers Limited, right? Have you paid them? Haven't paid yet. So when your inventory increase, the other account affected is Jason Brothers. Trade payable, Jason Brothers. Because you haven't paid them. And of course, you are going to calculate the balance brought down, which is 41,400. How to get 41? 23,500 plus 17,900 equals 41,400. You're halfway there, hanging there. This is May the 16th. On May the 18th, what happened? They tell you here that you return all the goods to Jason because they were wrong specification, wrong color, wrong model. So we have to record this, right? So this happened on May the 18th. And therefore, I have May the 18th over here. What happened? I bought 17,900 previously. That's why I plus. But now I'm going to return it. So I'm going to record credit or minus 17,900. I returned everything. And because I returned everything, I don't owe Jason any more money, right? So the other account affected is trade payable, Jason Brothers. I don't owe him any more money. So how do I calculate my balance? I have my 41,400 minus away 17,900. Which will give me 23,500. Two more transactions. Hang in there. On May the 24th, so something happened on May 24th, which we are going to record in a short while. On May the 24th, I write my date first, May 24th, I issued a check for the purchase of 40 units costing 31,500. I'm going to highlight this in another color again, in gray this time. 40 units costing 31,500. And this is batch 3. Why is it batch 3 again? Because remember, this batch 3 over here, I have returned it. So really, there's no batch 3. So I have purchased another 40 units costing 31,500 from Nicholas Footwear, and I issued a check, right? So I'm going to record this first. Okay, so firstly, on May 24th, when I buy inventory, my inventory is going to be recorded as a debit, an increase in my inventory of 31,500. What is the other account affected? Is it going to be trade payable Nicholas Footwear? No, because you see, issue a check already paid. So whenever you see check, you're thinking of cash at bank, right? Are you going to write cash at bank hyphen Nicholas Footwear? No, actually, you're not going to. You don't really care who paid you because you already paid. So you're just going to write cash at bank. No need to write Nicholas Footwear Limited because you already paid. Don't need to say who gave you the money. And then, of course, your balance column, you are going to record 23,500 plus 31,500, which will give you 55,000. Last transaction, hang in there. You sold 60 units of inventory. You sold 60 units of inventory, right? To Augustine International on credit for 34,000. Now, if you sold 60 units, which batch is this? Is this the 20 units that you, this 20 units plus 40? No, because you have this B2, which you haven't sold yet. First in, first out. Whatever you buy first in green, you're going to sell it first. Now, you already sold your B1, batch 1. So now you're going to sell your batch 2. So your 60 units of inventory over here is your batch 2 that you are going to sell right now. Right? Your batch 2. And I sold 60 units of inventory. And when I sell inventory, how do I record that in my inventory account? So firstly, I'm going to write my date first, May 28. And then I'm going to record inventory. I sold the inventory, so the inventory has left my business. If the inventory has left my business, it is a minus, a credit. Credit what value? Can you see here that the value here for B2 is 23,500? So you are going to credit that value. You're going to credit 23,500. No more because you sold it. So minus. The other account affected. Whenever you sell inventory, you need to record inventory minus the other account affected is cost of sales plus. And of course, finally, you calculate your balance column by taking 55,000 minus 23,000, which will give you 31,500. In this case, you have mostly finished your inventory account. You recorded all the transactions in May, but don't forget, you have not brought down your balance. So your last thing that you need to do is to bring down the balance on 1st of June, which is 1 month. So that's how we prepare our inventory account to record the transactions. All right. Now, next thing, what are they asking you to do? They're asking you to calculate the sales revenue. Now, you can't tell the sales revenue from the inventory account. You really have to go back and look at your question to calculate the sales revenue. So quite a lot of sales here. I'm going to just remove all the highlighting just to make it a bit clearer. All right. But in this case, when I read the question, I know that there are some sales. So for example, there is this sales here, which I am going to bold. Maybe I'm going to change the colors as well. Okay, so change the color and then bold. All right. So when I read through the question here, I know that there are some units here that I have sold. So that's a sale. And then I also have another unit here that I sold, right? So what is the sales revenue? Is the sales revenue whatever I recorded here, 12,000 and then 23,000? No, actually, the selling price is quoted here. So the selling price, 32,000. And then again, another selling price for my May 28 is 34,500. So my sales revenue, if I want to calculate both of them, I would have to take the sales revenue, 32,000 plus 34,500, which will give me 66,500. 32,000 and 34,000. I also have to remember that if I don't write a dollar sign for my final answer, there is no mark awarded. Next, cost of sales. Now for cost of sales, they ask you to calculate. So for cost of sales, an easy way to do it is to really look at your inventory account. And then after that, look at the amounts that you have sold. All right, so inventory go down. The other account affected is cost of sales, right? So these two values, which will give you your cost of sale, is quite straightforward. You just need to take 12,000, which is what you originally sold, all right, the first batch that you sold, plus 23,500, which is the second batch that you sold. And you will get 35,500. Again, no dollar sign, no mark. What about gross profit? Now for gross profit, you need a bit of a formula. So what is the formula for gross profit? Gross profit is really sales revenue minus away cost of sales, right? And you have already calculated the both of them. So sales revenue minus away cost of sales, 66,500 over here, minus 35,500 will give you 31,000. And again, no dollar sign, no mark. Alright, so this is a quick summary of inventory chapter. All the best.